To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ. How are you?
I'm well. Hi, everybody. This is AJ Brown, as you already was introduced.
AJ Brown, episode 93. Today is August 11th, and I feel like the keyword on the street starting today is inflation. We got inflation numbers yesterday. We got inflation numbers today. They're kind of all over the place. I don't know, AJ, you tell me, what are you seeing on your end? What's moving the market?
Well, let's take a look at the economic reports here. There we go. So if you take a look at the economic calendar, it was kind of a short week as far as economic news. It was a quiet week, I should say. And you can see right here, yesterday, there was a lot of buildup to the consumer price index. When we take a look closer at that consumer price index, what you can see here is 0.2% growth. And I think a lot of folks have stopped looking at the annual numbers. And the reason why they've done that is because there's been so much aggressive behavior over the last years by the Federal Reserve to try to control inflation that these effects of the tactics that they've taken could be coming in. And so looking out past, just a couple of months is not going to be helpful because that was in a whole other time. So looking at the 0.2% and maybe extrapolating out for the next year, multiplying by 12, you get 2.4%. Same when you factor out the more volatile food and energy. 2.4%. That's getting closer to the Fed numbers. And if the Fed was only using this report, it would kind of signal that they're done raising rates. But I'm not so sure because the Federal Reserve totally made some comments on Thursday after this here report, basically saying that they're prepared to do more tightening. This morning, we got wholesale inflation, and it was a little bit on the hotter side. You can see here they were expecting 0.2% growth. It grew by 0.3%. When you start to take a look, when you factor out the more volatile food and energy, same thing, a little bit on the hot side. And then here's this one where they factor out supposedly this very volatile trade services. Now, as soon as they factor out trade services, it kind of comes back into where expectation is. That is one of the only kind of hints that the government is paying attention, or the Federal Reserve is paying attention to these things called trade services, which when we go shopping at the stores and we go to the gas pump and we go and to restaurants and things like that, man, it sure does seem like prices continue to go higher.
I agree. And I guess one of the things that I came across this morning is the whole inflation picture being told in these few reports. And because for us as everyday consumers, I agree. It does seem like it's more expensive, and 3% seems a little bit out of line. But it looks like you pulled up the chart here, and the past week we've been talking about a potential pullback in the market is something that you were anticipating, and it was kind of time for it. And so did we surpass where we wanted to go on the pullback, or are we kind of setting up for the next move back to the upside?
It's definitely giving us some pressure. So you could see in my chart here, I'm actually going to zoom into the last couple of moves here. You can see that I had this level identified. This is the halfway zone. Halfway, I always compare the current moves, whether it be a contraction move, against the longer trend. In this case, we're in an uptrend. So contraction means pulling back. I compare it to the previous move, which was an expansion move, which was in the direction of the uptrend. And so halfway back on the previous move would have put us between $4,471.53 and $4,516.38. And as you can see, we keep basically loitering around that lower level. In fact, for the past two closes, the close on Wednesday and the close on Thursday, we closed lower than that level. And already we've seen some pressure today. I'm not sure where we're going to end, but we're hovering below this level. When we get below this level, we start to have our ideal uptrend be under pressure. Not only that, you can see that we've got this ascending trend. Last week, I was wondering whether this more recent level of ascending support identified by this magenta line, whether that was going to be the level of support we went for most recently, or whether we would go back to this original level of support. And if I zoom out, you'll know what I'm talking about. This more recent level of support is this magenta line. But since the beginning of this uptrend, we've had this cyan or light blue line. And I thought we were going to stop at the magenta line. I mean, that would have made sense. But it looks like now we're not only going to the cyan line, the light blue line, but we seem to have, we're challenging even the ascending line of support. So this uptrend is kind of under pressure right now. I don't doubt it. This was a quiet week. We had some economic news towards the end of the week. We've had, don't forget, on Wednesday, Tuesday, Moody's started to downgrade bank stocks again, the small and mid-sized banks. And so that created a little bit of selling on Tuesday and on Wednesday. China has come back. You know, China and the US are majorly integrated economically, especially around trade. As much as we like to try to say that we're decoupling, I mean, we are like this. And China's been having their own economic issues. One, because internally they had a housing bubble that is really, I mean, it's one of the bigger bubbles to have burst, and it's creating quite a turmoil in their economy. But also, they've been reporting that trade numbers are down, meaning that we're not having as much back and forth. And that's not because we're outsourcing to other countries or anything. It's just because things are slowing down. And so news like that also kind of hit the economy. So when left with no information, investors jump to whatever tidbits they're hearing at the moment, especially when they're uncertain and they're a little bit confused. They start to live day by day. And if there's no solid fact-based news on a certain day, they'll start to believe rumors. And so this week has kind of been like that, where there's a lot of kind of reacting to not news, in my opinion. But that doesn't mean we're not under pressure. I mean, if you take a look over here, I've got this other report that you and I tend to look at often, and that is the Fed selling back bonds. So behind the scenes, and we tend to look at this often, the Fed continues to basically shred cash that they created during the pandemic. And they're doing this at a pretty, not a super aggressive, but a pretty consistent pace. And so as that cash is being shredded, things are just, they're trying to control the inflationary pressures with normal growth and with interest rates, but at the same time, they're shredding up the cash, which is making things also slow down. And so all of these factors may actually put us into a stall. And just seeing this uptrend under pressure this week makes me wonder if we can rebuild the momentum to get above that very heavy level of resistance at 4,600, or if we're going to just wind up going sideways in this zone for even as much as a couple years. I am watching this lower level SIP of about 4,400. Specifically, I'm looking at $4,398.70. That's close enough to 4,400. I'm looking at this level because going below that level would change my opinion on a lot of things. It would basically tell us that the uptrend that we've been working on is over. But I don't see us near that at this point, but I am watching that level closely. In the meantime, one last data point is our VIX. This is the uncertainty. And you can see that the VIX has created a step function increase. For the last week and a half, it's been trading up here at a higher level than it was for like the last month and a half. It's still below the overall mean, which means people still have a sense of confidence. But all of my traders are putting on their VIX trade, which is kind of a hedge for their whole portfolio, just in case the proverbial poop hits the fan. This might be a good time to do that. And at the same time, having a higher VIX is also good for us folks who like to sell option premium, because that means that when we sell our option premiums, we're getting higher values for those.
You know, it's crazy to think when you mention we may stay in this range for a couple years, right? I feel like modern day investors, traders are really used to fluctuations, going up, going up, going down. But the thought, and for you to even mention that we could stay in this range for a while is kind of hard to believe. But I don't think you're wrong, because we do have these like two parallels, fighting with each other: inflation, interest rates, growth, employment, and they're all kind of, in step with each other almost. The one thing that I did come across on my end on Twitter the other day that I thought would be interesting to bring up is in these CPI and PPI and inflation reports, how they don't factor other pieces, other, parts of the economy in. And so I came across this tweet where it breaks down some of the different services and their inflationary rates. Motor vehicle insurance up 17%, tax preparation up 14%, food from vending machines 14%. So, this is that inflation that you spoke about, where we go to the grocery store, we go about our daily lives, and we still feel the price increases. And so I'm just curious how the Fed and our government officials are taking these things into consideration. I hope they are. But looking at this, it would make it seem like we're going to get another rate hike, maybe not the next meeting, but the meeting after that. And it seems as if they're not going to be stopping or lowering them anytime soon.
Yeah. I think that learning to live with these current interest rate levels is something that we're going to get used to. I think I wouldn't even be surprised. We've had these ultra low interest rate levels for the last 15 plus years. I wouldn't be surprised. And some people call that almost a generation, almost a 20-year move. I wouldn't be surprised if the next 20 years, unless something crazy happens, we don't stay around anywhere from the 2 to 6% range, right? And I think that's actually not a bad thing, because what that means is that people can put their money into a normal savings account or certificate of deposit and earn a respectable interest rate, and it will keep kind of folks from wanting to invest in things that have no basis, which we saw a lot of in the late 2010s. Here you can see what investors think about the upcoming Fed meeting. So here you see this is for the September 20 meeting. Right now, investors, and it's been consistent over the last weeks, but investors don't believe that there's going to be a rate hike this time around. But then there's the December meeting, and so we'll have to see. It's not off the table for sure that the Fed's not going to do another quarter point rate hike. I think, though, they've hinted quite adamantly that they're not going to do any more of these like continued huge rate hikes like they did in 2022. So I think it's going to be more digestible. But yeah, I think this is the new normal.
And fortunately for us, and fortunately for the members of the trading trainer community, we are utilizing this wonderful tool called Options to take advantage of moves that are sideways, moves that aren't going up, moves that aren't going down, using this concept of premium selling to generate income, to earn a return, no matter what's happening in the economy. But it does seem like we're heading into this lull, and it's a great time to get involved to learn more about it. And so with that being said, let's go ahead and invite everybody that's watching, that's listening, to check out the free daily workshop. AJ has put together an amazing little presentation where he breaks down 4 strategies that he uses to basically generate income almost as if it was a job. And so the link to that is in the chat. So head on over there and check it out. Once again, this is a live show, and at the end of the show, if we have some time, if you, the viewers, have some tickers that you want us to run through, feel free to throw them into the chat, and we'll see if we can get to them. Otherwise, we've got our trending topic, we've got AJ's pick of the week, we've got our speed round, and so we're going to take a short break here, and we'll be back, and we'll dig into trending topic.
Awesome. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So heading into our trending topic, when I saw this on the notes this morning, I thought to myself, well, this is a really good question that I imagine a lot of options traders or new options traders ask themselves. And there may be a few different ways to ask this, but what are profit and loss diagrams for options? What do they look like? And I've seen some of these, and they have interesting chart patterns, and I'm wondering if that's what we're going to discuss, but also the impact of options on these diagrams. Because the cool thing is you have a limit, and you have you have your reward and you have your risk, and it's set. And that's one of the beautiful things of options. So AJ, break that all down for me. Help me educate the viewers on how to read these things.
Well, first of all, profit and loss diagrams with respect to options are, if you're going to get into options, you at least need to know the basics about them. And the reason is because these things are basically the fingerprints of the different option strategies. The profit and loss diagrams define or tell us how this particular option strategy is going to behave with what's going on in the markets. Coming back to like kind of the beginning of our education with graphs, if you think about it, the way that we look at graphs, and I have my marker here set to automatically fade. Let me go ahead and let these fade, and then I'll bring them back and permanent here, because I want to give you guys a quick little lesson. When you think about when you were in grade school, we learned how to graph with like this XY coordinate, meaning the X is the horizontal one and the Y is the vertical one. The X one is typically our independent variable. This is the variable that we're going to measure, and it's not something that is affected by anything we're doing. And a lot of times with options, that's the underlying symbol price, probably the most popular, but also sometimes we look at like time, like the number of days to expiration. That's also a independent variable. And then the Y side is our profit and loss. So profit, and then anything below the zero line is loss. So how does the option price relate to whatever this independent variable is? Maybe, like I said, it could be the underlying symbol price, or it could be the number of days to expiration. And if it's below zero, that's considered a loss, or another word for loss is risk. And if it's above zero, that's considered a profit. And another word for profit is reward. So a lot of times people use risk reward graph as it's the same exact thing as profit and loss diagram. So these things, if you have a stock and you buy a stock, it's pretty straightforward. Wherever you bought the stock price at, if this X independent variable is the stock price, the underlying symbol price, then as the stock price goes up, your profit goes up. And as the stock price goes down, your profit goes down. So that straight line, that defines the profit and loss diagram for just buying a stock. If you're shorting a stock, it's an inverse relationship. It does something like this. As the stock price goes down $1, your profit goes up $1. So that's pretty straightforward. But now when you start getting into options, it can get crazier. And most of the options analysis software, whether you're using something like a Thinkorswim or a Tasty Trade, or you're using something like an Options View, any of these softwares that can analyze, they typically have the ability to do a risk graph. So let's say, for instance, let's bring up a particular stock, and let's say that we put a call option. I'll just do an at the money September option, and I'll put it out there into our positions here. There it is. Now, the first thing is I'll show you, it'll draw, I'm just showing you the stock now. So let's look at this. And so as you can see here with just the stock, it kind of is just that main line here. But when I throw the option in, this is buying a call option, you can see that this has its own kind of fingerprint of what a call option that we buy looks like. And if you instead sell it, it takes on a whole different picture. And so option traders learn how to read these common fingerprints, and they learn how over time. So as you can see here, you see this magenta line. The cyan line is the value of the option at expiration. So when this thing expires, this is what it's worth, depending on what the stock is worth. But this magenta line is approximation of what it's worth right now. And so, for instance, you can see here, I can simulate what happens as this thing gets closer and closer to its expiration date in September. You can see that its value right now winds up ultimately on the expiration date becoming the same as that cyan line. So option traders that actually are, in the game and knowing what they're doing, they'll use these profit and loss diagrams in order to really understand how the option is going to behave with the pattern that it's trading against. So if you're going to play with options, I strongly suggest you kind of get into these profit and loss diagrams. They tell you everything about how the strategy you're about to trade will work with the stock and the time and all of that good stuff.
I think that's a great breakdown. And I have one follow-up question, and that is when using multiple options, does the diagram start to pivot? And that's like a secondary way of looking at it when you have, especially with your strategy of legging in and having, different time frames involved?
Absolutely. In fact, why don't we even play around with that? So if I come back over here, and what we wind up doing is something like a diagonal. And so why don't I just throw one on really quick, and you can kind of understand what our strategies look like. I'm going to put one on that's roughly at the money, and let's see what happens here. So this is a diagonal, and if we take a look at what this particular profit and loss diagram looks like, you can see that these type of, I mean, we start to get into all sorts of nuances. So what this is basically saying is, as the stock goes up to $33, we're going to make the most money, but then it slowly, gradually works off past $33 and even more slowly. In other words, each option strategy has its own flavor. This is a diagonal, and this is not even a protected diagonal. If we were to add our protective option that we always talk about. So say, for instance, we've got this diagonal in place. A lot of times what we'll do is we'll use this one out here and make it like a January 2025. We'll make this one more like a September or an August. Let's see. Here's August 18th. This is more likely the diagonal that we're playing with, something that looks like this. But then we always add on that protective option. So it gets more and more nuanced. But if we add now a protective option, so we'll come back here to our singles, and we'll go out to maybe January with our protective option. Boom. And then we'll put a, let's say a $30. Let's go ahead and buy that. Buy that and get rid of this one. Now you'll see an even neater picture. So now you can see how we've actually got this two different fulcrums of this profit and loss diagram. And this all makes sense as you get farther and farther into options and what you're trying to do.
All right. Well, that I believe that gives a good breakdown, and I think it also really gives a good representation of the time component, right? Like when we talk about, oh, the market's not going up or it's not going down, it's staying in the middle. It's these types of diagrams that you can profit the most if the price kind of stays there in the middle, right? Because it is an insurance contract that has a value to it, and then it expires. And so it makes sense that there's these levels of not maximum price or minimum price, but something in the middle that's kind of stabilizing it all, that you, other options traders, are taking advantage of, which is why we've got the show, which is why we're letting everyone throw out some names at us, which is why we're going to dig into some live examples and really show off the power of options. And so I saw, AJ, that you had the GM stock up, right? So I think that's because that's your pick of the week this week. And so let's dig right into it. Let's see what you are looking for in General Motors for your pick of the week, ticker symbol GM. And what are you thinking here?
Well, look at this chart. So let me go back in time a little bit here. I'll get my marker all gigged up here. If I go back in time, you can see that this falls into one of those symbols I really like. Why? Because it's boring. It goes between this range of about $32 and about maybe $41 on a good day, $43. But for the last year, it's been in this zone. I mean, if I go back 2 years, there was a little moment there where it was up here. But for the most part, people look at GM as a very mature company, a company that will probably get bailouts if it was ever in trouble by the government, because it's so big. The government's going to think not to let it fail. So they look at this company as just something that's going to be around for a long time. Not only that, the company, every time it reports earnings, it's making money. It's giving some of that money back to the investors in the form of dividends. Folks are just like, okay, GM's a stock, and it's kind of almost a defensive play out there. It's not really considered a high-tech play. So these are the stocks that I like to create income off of. And I can do that using options. And this pattern is coming on down from the high levels to its low levels. And based on the most recent history, I'm actually expecting it to kind of find a bottom here at $33. And so this is a perfect opportunity to do a multiple of different transactions that could start or continue some income. Now, we featured GM in the past. And so folks may have been paper or even real money trading GM from one of our past shows. So if you have either some stock or some back month call options, then this bottom here is going to be a perfect time for you to sell your protective puts or another source of income on that position. So we generate two sources of income on our positions when we get them going. One is the income from selling the covered option. In this case, it would be a covered call. And the second source of income is rolling out our protective options. Every time we roll them out, we get another paycheck. And so the timing is coming. Now I'm going to wait for it to bottom. I'm not going to, jump on this until it actually shows me the signals that it's kind of forming a bottom and going back up. But that would be our signal in order to sell our protective options and get ready again to do this cycle all over again. Now, if you're not in that initial covering position, if you didn't take our heed with either your simulator, paper trading, or real money account in the past, then this would be a perfect opportunity to either buy some stock or buy some back month deep in the money call options, which act as stock replacements with a little bit of leverage. One of the benefits, though, of going with the stock, and it's not that too expensive of a stock, is that you'd be putting yourself up for some of that dividend when it comes around quarterly. But if that doesn't matter to you, then using a leveraged option, that's not a bad idea. There's plenty of trading on GM, so you're not going to have any problems with that. Again, we're going to wait for the signals from GM that a bottom has been found, but we're forecasting it to be soon around this $33 mark. Once we get that signal, you can start this process of having that initial covering position in place. Finally, if you're one of those folks that's been contrarian and you started your premium selling position by setting up an initial covering position at one of these tops rather than a bottom, that means you've either shorted some GM stock or you bought some back month deep in the money put options. This is going to be the perfect opportunity to set up the first paycheck or the subsequent paycheck. This is where you're going to sell some covered puts because you have that initial covering position in place that you did when we were at the top of the channel. So you're going to sell those covered puts and you're going to buy some protective calls, probably with a strike price somewhere just outside of your break-even price. So probably with a strike price up here around $42, $43. You're going to put those in place, and then you're just going to let time work for you. When you've got those two trades in place, SIP, you've basically created a range-bound strategy, which if the underlying symbol goes outside of the range in either way, it self-adjusts. So the whole time that those trades are in place, you could rest easy. The stock can do anything, and you're going to be protected against risk.
So I'm really liking the support there at that 33 level. And my follow-up question would be, when we get there, what's the next thing that you're going to be looking for in order to confirm that a bottom has been found? And I know we tend to look at your customized MACD. And is that enough for you? Do you need any other indicators, or are you confident enough with the support that you've developed or that you've identified and the crossing of the MACD, along with maybe, looking at some of the options pricing?
That's a super great question. So the scoop is I like these end of day indicators. So the fast MACD is one that I don't look at during the day. I look at it at the end of the day after the market is closed. So at the end of every day, I'll come by and just like you said, I'll look at this level of $33 and I'll correlate that with a crossing of the MACD. You can see we haven't had that crossing yet. We had a crossing up here telling us that a top was found, and sure enough, it was very much right. I'm going to wait. And so every evening, I'm going to check in with this chart to see if I get that indication. Now, when I do get that indication, I may want to look for some volume validation, some price bars. You know, we can use the bars, whether you're using candlestick analysis or just basic Western analysis of simple S and Z bars, or things we call like Lincoln's hats or upside down Lincoln's hats, things like that, to let us know that the other factors do agree with that crossing of the MACD. But here's the big key, and this is where I use automation. All of these trading platforms, all of our brokers these days have some sort of conditional ordering that they can place, which basically means you can program in advance what it should look for during the next trading day to actually place the trade. And I use that to the most. What I like to do is I like to make sure, and I program this the night before. So when I see that MACD crossing and I verify it with some volume and some price action, if I decide that I want to try to take action the next day, I spend a couple of additional minutes that evening and I program the automated trader for the next day. So I'll make sure that, number one, I don't want it to be trying to do any trading during the first hour of trading or the morning session. That's because there's economic news being released. People are digesting earnings. Those folks who haven't yet gone off to work for the day are in there kind of creating some volatility. So I want all of that to calm down. I want to be in the afternoon session, maybe even in the last hour of trading, professional hour. And at that point, I want to make sure that I'm trading in the correct direction. So I want to be trading above the previous day close in the case of a bottom, in the case of a top, trading below. These are all basic rules that the conditional trader can take into consideration. Make sure I'm trading above yesterday's close. Make sure I'm trading above today's open range, which is the high of the first 30 minutes. Make sure that the RSI is pointing up, the on-balance volume is pointing up, the accumulation distribution. I talk to my program participants about these exact follow-through rules, but I basically let the automatic trader do that for me, because the next time I'm actually going to sit down and look at the charts is not during the trading day, but the next evening. And I'll just come in and see if that automated trader was successful or not in placing an order. And if it wasn't, I'll see if I want to try again the next day. If it was, great, I'll start managing that position. But it becomes very robotic, and it's done only after hours so that I have my days free. And so it's just a cool little process that I go through so that I can have my days free. And you can program those automatic traders to either be limit orders or market orders. It depends on your broker. Talk to your broker. And a lot of the brokers now actually have what they call API software, which means you can have a external automatic trader connected to your brokerage account, and that guy just sends, instructions. And so, automation is key. That's what I do, because number one, I need my days free. I got a lot going on, and that's the last thing I want to do is be in front of the computer all day. In fact, when I quit my job in order to just manage my portfolio full time back in 2005, I promised myself that I would not replace this salaried 9 to 5, which also often wound up being 9 to 7, Monday through Saturday. I promised myself I would not replace that job with another job, right? So I wanted to think smart instead of think hard, right? And so that's one reason. The other reason is I have to say that when the market's going on and I'm watching all these price bars move around and I'm watching the option, I start to get emotional. Just like when I walk into a casino sip and I start hearing all the sounds, I can't help but start reaching for my back pocket and grabbing for my wallet. And that's just not a place you want to be when you're trying to create a system to reliably and consistently bring in income. So you want to factor your emotions out. And this is the way that I have found to do that, to use automation, especially now that it's really prevalent.
And some people might say that it's a little bit slower, it's a little bit more boring. But if you want to win long term, that's probably a better approach than fast money. And new investors, they catch a couple wins and they think it's that easy until they catch a couple losers, and then they're scratching their head, because there are very intelligent people with very sophisticated systems in this market that are competing directly with you. And so having a strategy that's validated over time, I think, is why you've been successful, why Trading Trainer as a program has been successful, why a lot of your members have been successful, and why all of us can sleep easily at night, because we're not risking as much, we're not stressing ourselves out.
I think it's like that story of the tortoise and the hare. I'm pretty much a automated tortoise. That my tortoise is on freaking cruise control, right? It's on full self-driving for the most part. I'll basically tell it every evening which direction I want it to go, and then I let it go. And sure, it seems like at the moment it's slow because it's maybe doubling my portfolio every 6, 7, 8 months right now. But the truth is consistency is key. I've seen traders who have grown their portfolio up by millions and then dropped it and been in the hole by millions. And at the end of like a few years, I'm always ahead, and mine's just consistently chugging along, cruise control, right? So it tires people out to have those ups and downs, those extreme ups and downs. And I got better things to do. I've got this bucket list that I just want to keep checking things off. And so I need to not only have that consistency, but I also have to minimize my efforts to get that. And so I've got it down pat. And that's really what my program participants are learning from me.
And if anyone, once again, is interested in getting involved, head on over to that webinar link. It is in the chat. If you sign up there, you'll get the information on how to get into the webinar and some of the other program details. All right, moving on in the show. Throughout the week, we've got members from all across the world giving us some suggestions, throwing out some names, asking some questions. And so this week, we've got some pretty exciting names that we'll see if there's an options play. We'll get AJ's input, and we'll see if there's a way to make some money off of these. That's not always the case, which is why we bring them up at random to see what is going on. So let's go ahead and start with a very popular name. Lots of documentaries coming out being made about this company. And I think a little bit of excitement recently with Barbie and the Oppenheimer releases. And that is David from Medford, Oregon, interested in your take on AMC Entertainment, ticker symbol AMC.
Yeah. Now, this was the company, along with GameStop, that the Reddit investors basically saved back a couple years ago from short sellers. And ever since those folks intervened and basically the spotlights were put on companies like AMC and GameStop, it kind of gave them a new breath of fresh air, gave them a massive injection of investment that they've been able to kind of steer in the correct direction. And so you take a look at this chart here. I'm going to come on back here. You can see that they had that pop. They came back down, but now they've been consistently trading at this range here. Let's now zoom back in now that we've got the bigger picture fresh in our mind. Honestly, it's currently in what I call a consolidation phase. That means that a lot of the investors are curious and in a wait and see or a holding pattern, ready to figure out what's going to happen next with AMC. And so this maybe isn't the best place for us to do some premium trading, because when you keep folks asking what comes next, investors who have a stake in the game, they're probably asking what's going to come next AMC, and they're looking to AMC, and it looks like they really haven't gotten any answers recently. It looks like they just had an earnings announcements where actually AMC broke even. You can see here the previous earnings announcements, they were losing a couple of dimes, somewhere 14 cents, 17 cents per share. Here they broke even, which isn't bad, but again, it's not a profitable company. So investors are like, well, what are we going to do next? And any sort of little tidbit of even hearsay dropped into that anticipation of investors could send this stock either flying up or flying down. And that's not a good thing that could happen when we're in a premium trade, right? Premium trades, we like them to be going sideways. So I'm not sure I would recommend one of our, repetitive premium trades here. One question I have for you, David, is do you want to add AMC to your portfolio? Because if you want to add AMC to your portfolio, one way that we can do that is with options. And as you can see here, let me kind of clear up my chart here. We've got options. In fact, we could do this on a weekly basis. I tend to not look often at weekly options. They tend to not have the amount of liquidity that I need for my larger portfolio. But you can see here, options are expiring every Friday. And so you could actually pick a price that you're willing to pay for AMC. So let's take a look at these options that are going to expire next Friday. You can see that you can pick the price on 50-cent increments. So say, for instance, you're willing to pay $4.50, and you're willing to pay that $4.50 anywhere between now and next Friday. If you were to sell this put, make sure you have the $4.50 ready just in case somebody's willing to sell it to you. It's currently going for $5.10, by the way. So if you're willing to pay $4.50, you could get paid 27 cents a share right now. And now this basic order is in place that you'll pay $4.50 on a stock that's currently worth $5.10 anytime between now and next Friday. Now, one of two things is going to happen sometime between now and next Friday. Either somebody's going to come up and say, sure, I'll sell you this for $4.50. Or next Friday comes, nobody has sold it to you for $4.50. You get to keep the 27 cents per share no matter what. And so that's nice, because if you do get somebody who will give it to you for $4.50, you've already made 27 cents. You're basically buying it for $4.23 instead of $4.50. So if you thought getting it $4.50 was a great price, you're actually getting it at $4.23 because you already got 27 cents up front. And if next Friday rolls around and nobody wanted to sell you the stock for $4.50, fine. Keep that 27 cents and do it again. And you can just keep collecting premiums until somebody is willing to pay, sell you the stock at the price you want to pay. So instead of doing a limit buy order where you say, this is the price I want to pay and it's good till whatever date, why not instead do one of these orders where you sell a put where you actually get paid to put the order in place? And if somebody doesn't want to fill your order at that price, fine. At least you made 27 cents a share. And you could do that over and over until you get the stock at the price you want to pay. So that's what I would recommend here. If you're looking to buy some of this AMC stock, this is how I would do it. I don't think I'd set up a premium trade right now on AMC. But if I was somebody who had researched AMC and I wanted some AMC stock in my portfolio, at least in the short term, I would start this process of using cash secured puts, selling cash secured puts to make it happen.
My only concern with AMC is I always feel like it's very disconnected from the actual fundamentals because of all the chatter on the boards and the Twitter feeds and stuff. And so that's one that I would keep an eye on, that stuff too, just because it has shown in the past to impact the price. And so AMC is always, I would consider, one of those wild, wild west names that you never really know what to expect.
But check this out. I mean, just look at the history here. I mean, earnings is past, so we're not really getting any sort of earnings news. The lowest price it's been coming out is like $4. This was back in June, $4.19, something like that. So say, for instance, you can get somebody to sell it to you for $4.50. You collected that 27 cents up front. So it's really like you're paying $4.23 once you apply that discount. So you now have a stock which is you bought at the lowest end of this channel. I mean, then if it goes back up to where it is right now, which for the majority of this channel, it did spend up above $5.50. Say, for instance, let me just pull out my calculator. So if you buy something for $4.23 after you apply the discount and you sell it for $5.50, you make $1.27. And if you figure that out with respect to the $4.23 that you paid, I mean, that's a 30% ROI. So, you know, and if you, like I said, this is a way to buy the stock, not only at the price that you want to pay for it, but also when you apply the upfront money you get for placing the order, it basically discounts the stock even further. You could lower your break-even price so low that you could then turn around and sell it in the next couple of days at its regular selling price and make a quick turnaround. So, you know, this is an idea. And I just don't know why people don't buy stocks this way all the time. I think it's just because they don't know that this way of buying stocks exists.
And so we named the show after you because you're the pro, but every once in a while I see some things and I felt that maybe there's something that I'm seeing in the chatter that might be worth piggybacking on here. But here's a similar post from the Wall Street Bets community. Guys, I have an idea. WeWork, which is trading at about 15, 16, 17, 20 cents. And so they put the chart of WeWork next to a chart of GameStop. And in my mind, I'm like, oh, well, that's interesting. Not that that's a recommendation. I just saw it and I thought, well, maybe that could be the next one on the board. So we'll keep an eye on that. And let's dig into some more speed round questions. All right. So we're going to head on to the East Coast. This is Karen in Roanoke, Virginia. Interested in oil name ExxonMobil, ticker symbol XOM.
Karen, I didn't make it down to Roanoke, but just recently I went about halfway, a little bit to Charlottesville. I really love this parts of Virginia. So you live in a very beautiful area of Virginia. With that said, the Roanoke, Lynchburg, Charlottesville, all of those, I kind of group those together. Maybe I shouldn't, but I do. ExxonMobil, first of all, this is a very expensive stock, which means the options will also be expensive. So I'm going to say this up front. Please examine the amount of risk potential that whatever position you're about to put on, it could be. And the reason is because you don't want to overextend how much of your portfolio you put at risk. Make sure you keep it within a number. And if some folks, I have found that if you have a smaller portfolio, you can risk a little bit more. But for a smaller portfolio, and I'm talking about a portfolio of 5,000 or less, maybe we put up on any one given trade so that we only risk up to 4% of that portfolio. That means you'd have to do 25 trades in a row to cancel out your portfolio. None of this stuff where I did one trade and I wiped myself out. Now, if your portfolio is between $5,000 and say $25,000, I would drop that number to about 3%. So no one trade should affect, or you shouldn't risk more than 3% of your portfolio in any one trade. Anything above $25,000, I think you should drop your risk appetite to about 2%. So 25,000 all the way up to say $250,000, drop it to 2%, so that you'd have to do 50 really crappy trades in a row, going to your max loss on each trade to wipe out your portfolio. And finally, if you have a large portfolio over $250,000, why don't you consider dropping your risk appetite to 1%? And so those are numbers that I have come up with over the last 20 years of experience. I never risk more than 1% of my portfolio. So that kind of reverse engineer it back here. Make sure, Karen, you're not going to be opening yourself up with this high price stock and option combo to too much risk. Look at how much risk one contract of this ExxonMobil would open you up to, and see if that's greater than your appetite. If so, maybe consider looking for another underlying symbol. So always, that's like the most boring part of trading, but calculating your risk and doing, risk assessment is critical to setting up a successful trading business. All right, now that I've put that out of the way, this symbol looks fantastic. I know that ExxonMobil is a very popular company, which means that the option, if I take a look at the option, there's lots of people trading the options. We have no problem with liquidity. You can see that in the bid-ask spread. Market makers are in there. If you placed a trade to buy or sell, there'd definitely be somebody who would fill it at the price you want to. So this is a good thing. It's in that pattern that we really like. This company has positive earnings. I mean, they're an energy play. In fact, this week specifically, all the energy companies seem to have gotten some wind behind their sails. They give out really fantastic dividends to their investors. If we zoom out on the chart and look at the fractal patterns, you can see that ExxonMobil, the investors are perfectly happy with it trading somewhere around this $90 to $100, $110, $120 range. So this is meeting all of our criteria for a fantastic premium trade. It's a little bit high for us to get into a initial covering position by either buying the stock or buying the back month deep in the money call option as a substitute to buying stock. So it's a little bit high in price. We like to buy low and sell high. If you've already got the stock in your portfolio, well, then you should be gearing up when it shows us a top. You should be gearing up to sell your call premium, buy some protective puts. Make sure your protective puts are probably somewhere around your break-even price. Also, make sure those protective puts are going to be protecting you against those losses. But I would be queued up for that. And if you're not, if you're looking to get into some sort of premium selling position on this, the other thing, if you don't already have a initial covering position, is when it does top out, you could do the reverse trade. You could set up an initial covering position by shorting the stock and or buying some back month deep in the money put options, and that would set you up for then selling premium every time a bottom is found. So I like it. Just like I said in the beginning, make sure the risk you're taking on here is within your appetite.
All right. I think the main feedback there is it's pretty expensive, so you got to have the portfolio. All right. We've got a few minutes left in the show. Let's go ahead and crank out our last speed round question. And this is Michael from Flagstaff, Arizona, interested in Las Vegas Sands, ticker symbol LVS. What's the ticker price? What's the stock price on that one?
$55 roughly.
Okay, it's up there.
I like it is up there, but you can use the option substitute. So you can use a substitute for the stock by using a deep in the money, far out in time call option or put option, depending on which way you're going to trade this. It looks like it's coming down for a bottom here. I am a little bit concerned at the consolidation again, but I have to give you some inside scoop. I have sold premium against Las Vegas. I am not currently in a trade, but I have sold premium against Las Vegas Sands in the past, and the trades have always worked out quite nicely. Again, this is a casino-based company. I believe they've got properties not only in Las Vegas, but I believe they've got some in Macau, which is Las Vegas times 3, over in China. I like it. I would let this thing bottom out, find out where it's going to bottom. When we're talking bottoms, we're talking about being able to buy things at a low, right? Buy low, sell high. I would let this bottom out. I would try to acquire either some of the stock or some of the stock substitute. And then as it goes high, I think I'd try to sell some premium. But again, maybe you paper trade this guy. You paper trade this guy until some of this uncertainty, this consolidation. I think you can see what I'm talking about, Sip. The price seems to be kind of coming down something like this and turning into a cone. We call that a converging or consolidating stock price pattern. I'd like to see it more going just sideways. So this last couple of months, and maybe that's a function of the summer doldrums, but I'd like to see this kind of get a wider channel. So my suggestion to you is do our premium trades the way that we've been talking on these shows forever in a simulator or paper trade, just to see how it works out over the next couple of weeks, even months. And if it's doing well for you, if you're able to trade it on the time scale that it gives you, then maybe consider some real money in the fall. But practice run this one.
On the topic of gambling, did you see ESPN's getting into the betting business?
I noticed that. Isn't ESPN, and correct me if I'm wrong, aren't they a subsidiary of Disney?
Exactly. So Disney, Mickey Mouse, is getting into gambling, and it sounds like they're really changing things up over there. But we won't dig into that. I just thought it was interesting that we were on the topic of.
Well, what about Elon versus Mark? That's going to be an interesting thing I wonder if there's going to be some betting on that somewhere in Rome or something.
There's got to be, right? But I mean, I don't know. I feel like they should be focusing on their companies and not trying to fight each other.
I saw an interview with the CEO of X or Twitter, the previous Twitter, and they asked about that, and she was like, "You know what? I run a business, and that is something extraneous with the owner of the company. I'm not going to be on the card," she said. So
the thing that,
but
the thing that if they were to raise the money and give it away to a reputable organization at the end of the day, I do think that would help mankind. Otherwise, let's put these two guys in a better position to help humanity. We don't really want to see them bad. At least that's my perspective.
Well, and I did notice in the tweet that Elon made, I think it was either this morning or last night regarding all of it, that they are putting all the proceeds to Zuckerberg's foundation. So I think that Zuckerberg's foundation is charitable, although I haven't heard of what he's into compared to, like, for instance, the Gates Foundation, but maybe he's got some stuff going. So I think they're trying to make it a charity thing, but it seems like it's just a thing of either relevance, like these guys don't feel like they're being relevant, so they need to do something like this, or even egos. I don't know.
It's probably egos. I mean, Mark Zuckerberg has been doing all the fighting stuff, so I mean, he just wants to fight. He wants to fight a titan, right? So we'll see if it comes to light. Maybe we'll talk about it on the show. We'll throw some highlight clips, but otherwise, we wouldn't touch the MMA stuff. No. All right, we're a little bit over our time here today, which means that it's had to have been a good show. So if you've enjoyed it, feel free to hit that like, hit that follow, hit that subscribe.
Tell your friends. Cyprian, let's tell them we're so close on our YouTube channel to hitting 1,000 subscribers, which is a major milestone. So if you've got folks that just tell them to subscribe to our show. We'd love to push this number over 1,000. The YouTube algorithm would really like that. We would really like that. It would be a major milestone, especially if we could hit that before our 100th show. So tell your friends.
That's right. And let's keep the momentum heading into back to school season, back to fall. As we get out of summer, The market should be getting a little bit more exciting. There should be some more opportunities. If you have a question, if you have a follow-up to what we talked about, feel free to leave a comment, send us a DM. Someone will get back to you as soon as you can. Otherwise, AJ, have a good weekend. Thank you once again. Thank you, everybody, for tuning in. We'll catch you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.